and into our Facebook community. Good evening to our Facebook community. We're joined tonight by one of our trainers and mentors, Rick Blaney. Between us, we've probably got about, well, I've got 23 years of property investing experience. Rick, you are, well, how long?
20, yeah, 20. I'm showing my age there a little bit, yeah.
So we've got 43 years worth of property investing experience under our belt, not all done in the best way. So that's good. You guys that are joining us tonight are going to learn from other people's mistakes. And this is going, we're in Clubhouse. So we have a room in Clubhouse tonight, and we also are live into our Facebook community, which is Property Wealth System community, which is the group. So if you want to join that, we have lots of content that we add considerably to that on a daily basis. So we're kind of killing two birds with one stone tonight, doing Clubhouse and a Facebook Live at the same time. So we're going to keep it nice and short tonight because this is the first time we have done the Clubhouse and Facebook Live at the same time. We're just going to run through some quite commonly asked questions that we have heard over the last 43 years of helping people get started or scale their property investing journey. And one of the most common questions we do get asked is, how much money do you need to get started investing in property? Or the other one is, I've got £3,000, is that enough? Or I've got £5,000, is that enough? Or I've got 500 quid, is that enough? And so we're going to tackle that commonly asked question this evening. And any other questions that you might have, if you pop them in the comment section, if you're in our Facebook community. And of course, if you're in our Clubhouse room, you can raise your hand. And we're going to try and do both at the same time, multitasking. So obviously, Rick, I'll be better at that than you because I am female.
Harsh, but probably true. And I think it's important to say, when it comes to questions, there is no such thing as a silly question. I've asked most of them along the time at one time or another. So yeah, just pop anything in there. It doesn't matter whether you're brand new to property, whether you're already investing. Ask away. This is a safe and secure place to ask questions about property and support you in, I guess, building your knowledge.
Right, so let's just kick off into the juicy thing then, Rick. And that is, the question that we're always asked: how much money do you need to start investing in property? Ooh, it's $1 million question, isn't it?
Isn't it? Yeah. How much have you got? And I think look, the popular misconception, and we talked earlier about how long we've both been investing in property. We've been both, doing it the professional way, and we've started out as amateurs, giving it a go, doing it all the wrong way. And I think when I started out, where I was working in corporate life, much the same as yourself, Caroline, going to work, saving, a few shekels for a buy-to-let, and doing it that way, thinking that the only way to invest in property was to have lots of money of your own or access to funds to get you going. And that's a real misconception. That's probably the biggest limiting factor, I think. So it's not how much money you've got, it's how well you're equipped and what tools you've got in your toolbox to create deals, to raise money and to get into deals, rather than having it sitting in your bank account. That's not how it works.
Yeah, well, lots of people love this whole no money down, or they're seeking a strategy that doesn't require any capital. And we just want to bust those myths tonight, don't we? First of all, the no money down thing, and then the strategies that work when you have less capital. But if we were to give a little bit of background on how to do it the wrong way, and then we can maybe talk a little bit about how to do it the right way, because I spent 10 years doing it wrong. And in that 10 years, bought 7 properties, and they weren't even deals, they were properties, and there's a difference, right? And I was doing it the way that I believed and what most people believe you need, which is the chunky deposits. You put the deposit and the mortgage together, and then now you own a property. And I spent 10 years doing it that way, and I didn't get very far. Although if you said to the average person on the street, I've got 7 buy-to-lets, they'd be quite impressed by that, because they think, wow, you've had some money to start there. So that was 10 years doing it wrong. How long did you do it wrong for, Rick?
Yeah, same as I was doing the wrong way, making loads of mistakes, and probably getting frustrated with it because, you know, the lack of knowledge and the lack of education how to do it the wrong way will slow you down, either financially but also in your mindset. So when you come up against perhaps a challenge or a block, that's the other thing. You know, when you're doing this as an amateur, as a sideline business, you can run out of steam very, very easily, and it can be a lonely place out there to be an entrepreneur doing it without a network. That's I think really important.
Yeah. So let's talk about this whole how much money. Well, will we address the no money down thing?
Yes, let's do that.
I think it's maybe the terminology that's maybe a little misleading, because ultimately when you are transacting on a property, money has to change hands, right? So that goes without saying that money has to exchange hands at some level, and it doesn't matter whose money that is, but there needs to be money that exchanges hands in order to secure a property. Now, depending on the strategy that you use, of course, because there are strategies that require very little capital to exchange hands, there still are just fees that you need to pay, isn't there? What kind of fee? What kind of money do we need to actually do a transaction, even when we're using other people's money? We've got solicitors' fees, brokers' fees. We've got surveys potentially. So on an average baby small buy-to-let, you're looking at a transactional cost fees of, let's say, £2,000 to £3,000 maybe. Is that a bit chunky? Maybe £2,000. £2,000, Rick, would you agree with that?
Yeah, sounds about right. Yeah, on a standard sort of buy-to-let purchase.
So there's £2,000 on the fees. Now that doesn't mean that it has to be your £2,000 and that £2,000 is the minimum that you need. But it's important that people don't think that if they've literally scraped pennies together to just read a book on how to invest in property, that suddenly now they're going to go out there and transact on a property. They're going to have to look at different strategies that are appropriate for their personal situation, right? And I think this is really the crux of that question is, it depends on your personal situation, and it depends on what you're trying to achieve, and it depends on another 5 or 6 factors about you personally, like the time that you've got, your credit file profile, the network that you're in terms of availability of capital that you can access. What do you think, Rick? What's your take on that?
Yeah, absolutely. I think, the main thing to do is not let money be a limiting factor. One of the key things I learned is it's much easier to raise money than it is to basically to save money. So to be a deal maker is much, much more important. Having the knowledge and having the understanding how to go and be a deal maker is going to serve you much better, because it doesn't matter how much money you're starting. It doesn't matter whether you're starting with £10,000, £20,000, £100,000. Eventually there'll be a deal comes along that will be more than the available funds that you've got. So it's really important to understand how can you go about creating that deal, whether it's a joint venture, whether it's basically having investors, angels that investing in your business in these deals with you to put up that capital to make the deal come alive. So that's really, really important. Do not let the limiting belief that because I don't have money in my bank account stop me from doing it. But by the same token, do understand that you are going to have money. The idea that you can do these magical unicorn deals with no money down, and there is going to be money involved in the transaction. Yeah,
I mean, when I started doing this properly after being trained and I was working with my mentor, I was really, really, really poor, right? And I can't even sugarcoat it. Like, we were debt up to our eyeballs. We were literally living hand to mouth, to get by. And so every single deal had to actually cover the fees and the cost of the transaction as well, because every penny was effectively raised to do the deal, and then the deal had to pay back not the angel investor that was covering the fees element as well. So while we've said, look, you're going to need a couple of grand to cover the fees, you can actually borrow that too, as long as the quality of the transaction, the deal that you're working on, covers that element as well. So maybe we should talk about the difference between a property and a deal, because that might not make any sense to people watching or listening right now, because, well, what's the difference between a property and a deal? What would you say about that then, Rick?
Well, I think, anybody can go out there and buy a property, and, it's relatively easy to do in terms of, understanding the transaction. A deal is where you're utilising your knowledge and your expertise to recycle the funds that you're putting in. So you can do it exponentially. You can do it again and again. It's a repeatable, transaction. And that's where a lot of amateurs go wrong. And, when I started out, I'd go to work, I'd save up for my deposit, I'd buy a house, I'd get all excited about it, I'd do all the DIY myself, I'd self-manage and make loads and loads and loads of errors. And then I thought, right, well, then I'll have to go back to work now, back into corporate life. So that's not a deal. It's, it's basically buying a property, as an amateur. And what we want to educate people in is how they can recycle all or most of their money, and that's where it's very different from your starting position. If you are starting with some capital, that will change how and what a deal looks to you, because a deal might look very different to everybody. Depends on your starting position, your starting capital, and also your end goals.
Yeah. Now, lots of people view a deal, and I'll put it in inverted commas, in different ways. So we've met students over the years. I mean, we've been training for well over a decade now. We've met students over the years who have said about yields, and yield is what they base their the quality of a deal on, is the yield that they're getting on their money that's left in the deal. Whereas we are far more focused on the return on the investment, and we analyze our deals in a slightly different way to, again, Joe average out on the street who's looking to just get a better return on their money than they would in the bank. My uncle falls into that category beautifully. He's got savings and he'll quite happily just buy a property and look at the return on the rent that he gets is giving him a better return than what he would get in the bank. And that to him is a deal. But to us, well, you can't scale the business because you're going to run out of savings, and it's going to get to the point where you can't move forward. And that's certainly the stage that I got to. Once I got to 7, it was like, right, I'm out of steam. I've run out of money. My business has just gone bust. Like, what do I do now? And it wasn't until I put myself into a network of people who really knew how to scale property businesses with very little capital and use leverage that suddenly I changed the whole mindset and thinking behind how deals were put together. So would you say a lot of it is just based on the numbers, or is it about people's expectations? Because you don't know what you don't know. I mean, if I was to sit down with my uncle and show him what we do, his brain would, go mad about that, because he understands putting money into something and then get a return from it. Whereas we're looking for that infinite return on investment to keep recycling over and over and over again with the funds. Now, for those of you that are watching just now, this is your opportunity to ask us questions. If you're in our Facebook Live, you can put comments and questions below here. And if you're in our Clubhouse room with us, again, you can flash your mic if you want to come up onto the stage here and ask us any questions. But we're just trying to kind of bust all the myths that might be out there for people who are either getting started or believe that they need to have a certain magical number of savings in the bank before they can get going. And it's about really turning our heads around the fact that it's not really about the money that you have. It's actually more about the quality of the deal that you have. So maybe it's all about people's skill and ability to source the deals and, in fact, analyze it to see if the quality of the deal stacks up. Would you agree, Rick? Oh, you're mute. He's muted. I don't know how he's done that. This is the first time that we've done a Clubhouse room and StreamYard live into our community. So, anything could happen tonight. He's just muted himself. And you're still mute. You're still mute. Maybe you're still mute. Okay. I'll just do a one-woman show with he's leaving and he's coming back. Are you there? No, he's not. All right. What was I saying? There you are.
Oh gosh, sorry. I had an outage on my my audio, so I could hear you on very tinny on my phone. So.
Oh, there we are. You're back. I can't even remember what I'm saying now. I think it was good.
I think it was amazing.
You can tell this isn't rehearsed, right?
Exactly.
Look, anything can happen in property, and also anything can happen with tech. So we were talking about the quality, actually, the ability to source properties and analyze them is actually more important than the money aspect. People focus so much on the money aspect that it stops them from even getting out there and looking for deals. And it's like that chicken and egg. What came first? Was it the chicken or was it the egg? Well, in property, you kind of need to get the deal to get your head round the money aspect of it. So what top tips would you give someone who has some real mind blocks around putting the deal ahead of the money, Rick?
Yeah, I mean, it is a continual catch-22. Which comes first? Which should I do? The answer is that as a professional, you're always going to be, you never have this, balance where you've got exactly the amount of money as you have deals. You've always got, too much deal, not enough money, too much money, not enough deal. So the great thing about having deals is you've then got something tangible to go to an investor. If you put something that's really well presented, well thought out, a clear business plan, you should absolutely have a really clear understanding of the sorts of questions that an investor might ask you. Yeah. That's where we've got this saying, that the deal, it supports the lending. So the money will always come to the deal if it's good enough. If you can't justify the lending, the angel, the bridge, or whatever mechanisms you're going to use to fund your deal, there's something fundamentally wrong with your deal. It's not good enough.
Yeah. And this is what I always keep coming back whenever we're teaching students, and they're absolutely obsessional about, but I don't know anyone with money. No one's going to give me money. That is the mental block. I don't know anyone with money. And why would they give me the money? Well, first of all, never assume that the people that are in your circle have money or not. Never, ever make that assumption one way or another, because I've met people over the years that might dress like they sleep on a bench, but actually have hundreds of thousands of pounds in the bank. And then someone who looks minted and absolutely pucka is completely broke. So we never, ever judge a book by its cover. So that's the first thing. But then what about this part of why would someone give me money? Who on earth is going to give me money? I don't know anyone with money. How do we deal with that one? Because that's one of my favorite parts of this game.
Yeah, well, I think, you've got to have a clear business plan. So if you're going to be, I always talk about, if you listen to our podcast, we've done some really good money raising podcasts. I think we're on part 2 of 3 or 4 at the moment. And we talked about this thing called layering, whereby, if you're starting a new business, you want to be out talking to your network and telling them what you're doing, what it's about. You should be really proud of your new business. And at that point, you're layering up what you're involved with and what returns on investment you can give them. You're doing this layering effect, whether it's talking to people, whether it's sharing stuff on your socials, whether it's sending them a business proposal. It's lots of different I guess high touches with what you're doing as a business person, as an entrepreneur, as an investor, as a property person, so that when you do have this amazing deal, people are aware of what you're about. So think about if someone came to you with an unbelievable deal, what are the sorts of things that you want to know about it? And that's what you need to be thinking about, because if you can't answer those questions, then it's going to limit your ability to raise money.
Yeah, and I think we've dealt with and taught students that are I would say very young because I'm very old, but like in early 20s. And their block is, oh, I'm too young, no one's going to take me seriously. But actually, the way that you communicate, if you can demonstrate that you've invested time, one of your most valuable commodities, and money learning how to do this properly, people are going to take you far more seriously because you can answer questions that maybe others who haven't done the same investment of time and money might stumble over and struggle with. And, if an angel investor says, well, what if your project overruns, or what if you can't refinance, or what if you can't sell? And if you don't have a sharp answer to that, you're then eroding away at any confidence they might have in lending you that money in the first place. So again, that chicken and egg really comes with, look, so people aren't going to give you money if you don't know what you're talking about. And that knowledge really is power. It's like in anything. If I was to, try and pitch the fact that I'm a quantum physicist, give me funding for my rocket project, I'm not going to get very far because I know zero about it, and they're going to catch me out within question 2. So it all falls into place with itself, that you have to invest the time and money to learn how to do it properly and know what you're doing, to then find the deals and analyze them correctly, to then be able to answer questions to raise the money, and then for it to cycle back on itself again over and over, so you can scale the business.
Someone might say there's a system involved, and
Yes, I would say there might be a system. There's a number of different strategies, and we touched on before when we started. And for those of you that might be just joining us in Clubhouse or on Facebook, tonight we're just trying to bust some myths. So you can, by all means, ask us any questions that you might have in the comment section, or in flash your hand up in the Clubhouse room. But we cover about 20 different strategies and skills that you can have in your armory when investing in property. Now, it doesn't mean that you need 20. We want you to choose a set core amount that will get you to your first goal. You focus on the things that you can control and understand, and that are in your realm of ability. So, when you're first starting out, you're not going to try and do a land development as your first deal, because number one, getting the lending for that is going to be very challenging. No one's going to give you the lending on it. And also, a hell of a lot can go wrong in a land development, as opposed to maybe doing a kitchen refit on a little 1-bed flat. So if you're interested in hearing more about the different strategies that we teach and we talk about, and we advise students when we have more time with them on a one-to-one basis to put a sort of bespoke plan together for them, then you can join us for a free webinar tomorrow night. The link is in my bio, so you can click on my bio and see it in there, the bit.ly link, and we'll pop the link here in the Facebook comments as well. It's a free webinar. It starts at 7 o'clock tomorrow night, and it'll last a couple of hours or so, but we will spend more time on the methodological way that we go through the process, and all the variety of strategies that can get you there, because it's not a one size fits all. Would you say that, Rick? That whole myth that, right, I'll have to start with buy to lets, or I've got no money, so I must do rent to rent. There is this idea out there, well, I've got no money, I'm doing rent to rent. And it isn't necessarily the right choice for that individual, because everyone is unique. Would you agree?
100%. And I think, when I started this as an amateur, I thought, well, there's either buying and selling them for a profit, or, buying them and turning it into buy-to-lets. I mean, that's it to property, isn't it? What else is there? And then, you start getting educated, you start to learn the fundamentals, and you learn about serviced accommodation, multi-lets, HMOs, you learn about, doing commercial to residential conversions, building out the ground, sourcing deals, flipping properties, doing joint ventures, raising money. And then all of a sudden you're like, there is a lot more to this than meets the eye. And I think one of the fundamental things with people and property is that we all live in a house. Everybody lives in a house or a flat, an apartment or whatever. And that generally, and this isn't me being arrogant, but this is how I thought, that, that makes you an expert in all things houses, doesn't it? Of course it does, but it doesn't. I wouldn't get on a plane and think, brilliant, I'm on a jumbo jet over the Pacific somewhere, and think I'm on a plane here, so clearly I can fly the thing. it doesn't work like that, and I think also I wouldn't be the sort of person that wants to give it a go. I've done that, and I've done it the hard and slow way, where like, all right, if I take the reins on this jumbo and see if I can work it out, that could end badly. So I think that's the real thing to understand with property, is that it's what do you say, Caroline? You say it's not
simple, but it's not easy.
It is simple, but it's not easy, and it is exactly like that. When you end up having a challenge, or something moves or pivots, that's where it's really important to have an understanding of how to to turn a challenge into an opportunity, or to work out how you're going to get around something, through it, over it, under it, or whatever it's going to be. So it's about having that ability to be a problem solver, and that's what investing in property is about. It's not difficult, it's fairly simplistic, but it's not easy.
Yeah, I always revert to, it's a bit like losing weight. Losing weight is really simple. You eat less and move around more. That's the formula, but it's just not easy, because there's so much wine and cake tempting you to not follow that simple formula. And of course, there's so many other ways, and so many other people in the world of dieting that will tell you different ways of doing it. No, you need to do the Atkins diet. You need to cut out the carbs. You need to do more exercise. Look, simple is just not easy. So I do think that buying houses and investing is a bit like losing weight. Only the women are going to relate to that, though, right?
I wonder if it was more like eating cake, whether it would be easier or harder. I don't know.
Oh dear. So that is a very common question. How much money do I need to get started investing in property? I mean, we've walked around the houses with it, excuse the pun, and actually said, to be honest, forget about the magic amount of money that you have, and actually focus on the quality of the deal. But there's actually a few steps before that, right? Before they should even start looking for deals and being able to analyze them to, decipher if they're a deal or a property. But what kind of steps before that do you think are even more important, Rick, before even going out there and starting looking for property?
Well, I think it's really important to have a good understanding of why you're doing it. What's the reason behind the property? Why do you want to have a career in property? Is it because you want to sack the boss? Maybe you are your boss. Maybe you're self-employed and you don't like being the boss. Maybe it comes with stresses and strains. Maybe you want to do something different. Maybe you don't feel fulfilled. So I think it's really important, firstly, to think about why. When you dig down to it, it's very it's very uncommon to have someone who, like, I just always fancied having 50 front doors and a big bunch of keys. There's always something more to it. So understand why you want to do it. What's the thing? Because it's quite nice at the moment. I was up viewing some smelly properties, a care home, commercial to resi, but it was still a 5.5 hour drive from where I live. So I had to get up and get out of bed and be motivated, think, right, today's going to be the day, when everyone's, sort of lying in, I'm out there, doing my thing. But that's what gets you out. It's that why, that reason for, to understand why you're doing. That's what's going to get you out and drive you forward. So that's the first thing. I think once you've got that, sorted out and you understand what it's all about, and because property is not for everybody, it may be that you go to you think, oh, if you don't like working hard, then property is probably not for you. If you like a really easy life and lying in all day and you don't have the work ethic, find something else to do.
Yeah, I know, right? I mean, again, it's not get rich quick.
No.
It does take a heck of a lot of effort. And so if you don't have a strong reason to do it, you will just take the path of least resistance and do something else, something that's easier. Don't get me wrong. Once it gets past a certain tipping point, it does actually become a lot easier. But it's putting that hard graft in at the beginning, isn't it? But I think you touched on a really important part, is the whole reason why you want to get started investing in property. very rarely over the last 10 plus years that we've been training people, very rarely has someone said to me, I want to do property because I want to be a multimillionaire. That I mean, I can't ever recall anyone saying those words to me. It's always related around something that they're passionate about, that they care about.
Yeah.
And it's not necessarily about greed, because if you said multimillionaire, then that's their ego talking rather than anything else. But more about, you know, a legacy for the kids, or I need my time back. I'm spending so much time at work. I'm not seeing my kids, or, you know, pension. I've realized I don't have a pension provision for when I want to retire. I want to travel more, whatever it is. It's something about them as a person. And we probably don't spend enough time as human beings reflecting on who we really are and what we truly want out of life.
Yeah.
So that probably is a really good starting point. It sounds a bit wishy-washy, and I think, you know, a lot of people don't really give it the time and effort that it probably deserves. But you need to know what it is that you're doing this all for. So we've got some questions coming in. I see there's a question, a hand raised in our Clubhouse room, and I see Ray J there has got a question that we'll address as well. So I'm going to go to the Clubhouse room now, and I think this is going to work. Catriona, here we go. Let's hope that you can talk us through your question. Hi, Catriona.
Hi, can you hear me?
I can hear you fine, Catriona. Hi there.
It's just Katrina. So thanks very much. And probably, I think you probably already answered my question. But so I did the 3-day intensive in November, and I've just finished my mentorship, 6 months with Jordan, which has been brilliant. And but I'm still, looking for the deal. Every week I'm on the Facebook Live, still looking for my first deal. And I guess there's an element of reassurance required really when I'm constantly doing the calculations and putting in offers, and just way below the crazy prices that are going at the moment. Yeah. And it's really, I guess, just to ask, you guys have been at this for so long, and people say, oh, there are still deals to be had, just, need to keep going, and I get that. But to be honest with you, I've been recently thinking, I wonder if I should just, leave money in the deal and all this kind of stuff just to get started.
Yeah.
And I guess what I probably need to hear is you need to stick to the formula. It will eventually work, but there's just that nagging feeling of I should really have something to show for my time by this stage, and not feeling like a failure, but just feeling like this is just, it seems like it's never going to happen,
Yeah, the frustration is absolutely completely part and parcel of the game, for sure. So let's talk through how we deal with that, Rick. With you've gone out there, you're doing everything that you've been told to do. You're desperately trying to secure your first deal. You're getting offers rejected. The market is hot. People are paying over. Then that question comes into your head, actually, should I try and just do a deal? And if I leave money in, then that's just part of the learning. And, what do you think, Rick, on that one?
Yeah, there's a lot of answers to that. So I think firstly, when it comes to leaving money in the deal, that is very much an individual, position. So if you were like Caroline and started and needed to recycle all of her money out, that wouldn't have been an option. The market was different 10 years ago. So, maybe there was more choice. So firstly, if you think, right, well, what about if I can get half my money out? Does that suit my strategy? And that really depends. If you're starting with a starting capital pot and you think, actually, if I can get going and I've got, £50,000 and I can afford to leave, £5,000 or £6,000 in each of the deals to get me to, my first 4 or 5, then I can perhaps do a blended strategy. Blended strategy is an absolutely great way of sort of netting out the money left in a deal, because you can then trade a property for profit, and then you can, let's say, make a £25,000 profit, and that £25,000 can go into your, your 4 or 5 deals to net those out at zero. So that's a really good way. But I don't think it's probably about the money. There's a couple of things going on in the market that's quite dynamic at the moment. We are in the market is cyclical, right? It never stays the same. It's always changing. So the market now is pretty hot. What does that mean? There's a supply and demand issue.
Yeah.
And that's down to to lots of different factors, but that supply and demand will always, it will always find a balance. We've got the COVID issues, we've got the stamp duty holiday, so that's coming to an end. So we're already seeing signs in Zoopla market information that's showing that supply and demand thing is starting to level off. A lot of people, it's sunny outside. The stamp duty window is coming to a close. Other people are going to be mad for property at the moment, and then they're going to be mad for Bitcoin tomorrow, because they're not fundamentally doing the same thing. So as soon as that balance comes back into the market, you're away and going. So it does sometimes feel difficult. When I started investing, late nearly 20 years ago, the market was exactly the same. I couldn't get a deal. I was doing it on my own. The market was hot. You'd look at something online and it was gone the same day. And then next minute you're every estate agent's best friend because you're in the market. So bear in mind that you're in it for the long term. Bear in mind that markets are cyclical. And then I think that the other question was, should I leave money in the deal? If you can raise money, or you can afford to leave money in the deal, and you feel comfortable with doing that, set yourself a point where you feel comfortable recycling that money out.
I mean, look, we're at the stage where we're buying properties at market value or slightly above, but we're going to be adding the value to it and pushing the back end value to then pull the capital out. And we're quite happy to leave the transactional costs in there, and if that's £5,000 to £10,000, depending on if it's a commercial or a residential deal, then that's the business decision that we've decided to make because it's right for our goal right now. So Katrina, it's really about, if you've got capital and you know how many transactions you need to do to get to your first goal, do you have enough capital to do that? And are you comfortable doing that? Or are you quite happy to just, do that kind of dual attack where you're raising money while you're putting your offers in? And look, there's nothing more soul destroying than having your offers declined, but keep the follow-up. I saw one of our students put an offer in last October. It was rejected. And it was accepted in October. It was accepted, and then the vendor turned around and said, actually, we've just received a higher offer, we're going to go with that one. So then they said, okay, well, just remember that my offer is still on the table. And just a couple of months ago, they've followed up again and said, look, we haven't seen the sold sign go up or anything. And they said, oh, well, actually the buyers with the higher offer have fallen on their face because they couldn't get the lending. And so she's now literally transacting on that now. But that was an offer that she put in back in October. So while you might be feeling that you're doing a lot of work and not actually getting a huge amount from it now, you will in months to come. It might be that you're just literally not feeling it or seeing it at this very moment in time. So there's a few things that you can look at there, Katrina. And again, that return on money, if you've got capital sitting there, it would really be a business decision that you make. It doesn't mean that you've failed in some way because you've left money in a deal. We've got plenty of students that leave money in HMO deals because the return they're getting is much, much higher. But it is a business decision that you make. And look, if you're missing out on deals by £3,000, £4,000, £5,000, then that's probably a reasonable business decision to make. Whereas if you're missing out on deals by £10,000, £15,000, £20,000, it's not even worth considering leaving that amount of money, particularly in a little buy to let. Does that help in any way, Katrina? Keep going, is what I would say. Very much so. And there'll be the Facebook Live in our advanced group again tomorrow night. So just stay close to the fire.
Thank you so much. Yeah, no, that's a great help. Thanks a lot.
No worries.
Hang in there. I think with everything in property, you get these kind of bumps in the road where, you know, once you get over them, you know, once you get that first deal secured, and I talk to it's happy coincidences. You know, we teach people, you know, a methodology, a system, how to do it, follow the actions. And, you know, I had one on, you know, on my phone from a group that I mentor, you know, someone had said to me, said, it's just like Rick said, you know, I did exactly what he said. I did, you know, I'm not some, you know, trailblazer here. I've copied successful people like Caroline who've been there before me, and picked up and stolen their ideas and run with them. And that's the thing. And all it was I asked the right questions. A deal that had gone, you know, locally to me, had come back on just because I'd followed up and said, look, if anything happens with it, you know, I'm here and ready to take up on that deal. And I think also just understanding for a lot of people, you know, when they first put the property on the market, a lot of people got this misconception that it's about the highest price. We, you know, are teaching people that it's not about the highest price always, it's about the certainty. So when we're transacting on a deal, we're giving people certainty. I met somebody yesterday who was desperate to sell, in a desperate position, has, you know, bought property, big old lump of Victorian, I mean, absolutely awful. It was like 9 flats, lost their job, retraining during COVID, you know, was open to all sorts of, you know, creative ideas to say, you know, we could do an option, we could do this, we could do that. You know, I could do a joint venture with you. So he's given me tells there that he's really seriously interested in doing some deal, because quite frankly, he's probably got themselves into a bit of a position that they don't know how to get out of. So yeah, keep going with the follow up, and you'll get that breakthrough. And then all of a sudden, you know, you're away and running again.
I do think getting some marketing around direct to vendors is also a great idea. So have you got your adverts out there that will attract, you know, that Joe Blogg sitting there thinking, oh, I'm about to go through a divorce, I can't handle, you know, going to an estate agent and showing everyone, you know, the insides of my house and my cupboards. And so, you know, direct to vendors, because one of our trainers, in fact, James, he has got a direct to vendor deal that came to him through a builder that knows that he does projects. And the vendor is accepting an offer from James that is less than what he paid 15 years ago. And that was 4.5 hours away from where James lives. So, you know, these deals are out there. There are people that are willing to not go down that conventional, put it on the market, have people bidding over it. You know, they have to clean out. And a lot of the buyers out there right now, Rick, would you agree, are owner occupiers? They're not actually the majority of investors. So when the owner occupiers all calm down because of the stamp duty holiday, then we're going to see maybe a little change in the market. So those of you that are listening at the moment in our Clubhouse room, if you're liking the content here, we're actually live in our Facebook community as well, Property Wealth System community. And we have a free webinar tomorrow night that's going to last around 2 hours with an interactive Q&A at the end of it. The link to that is in my bio. And for those of you that are watching on Facebook, I've just put it in the comments there, that bit.ly link to register for that free webinar tomorrow night. Now, Ray J, you've asked a question here, which is really, really good. And we've actually met a lot of people that are in your situation. How can I get started in real estate investing at the age of 18? Well, first of all, Ray J, tell me if you are in the UK or not, because you've used the terminology real estate, and we would not normally refer to it as that. And if you're not in the UK, then our answer is going to be different. So give us a shout out, Ray J, about where you're based. And then that will help us shape our answer to you. Because for me, if you were in the UK, it would be all about focusing on, in the background, getting your credit profile to a point where you're mortgageable, first and foremost. And then it would be about capital raising strategies, potentially, Rick. But again, it comes down to, Reggie, what you're trying to achieve. What is it you're looking at? So you're in Jamaica. Okay, so credit file in the UK ain't going to help you out. Yeah. And I'm not au fait with the property market in Jamaica. Rick, are you?
Nope. Not. But But I think, look, I mean, to give you, how would you get started in real estate investing? At some point, you've got to pick up some experience. So, I'd say to people when I meet, people in the UK are in a similar position, I say to them, look, okay, firstly, can you go and get work experience in an estate agency and pick up some experience and expertise, but not just work there, work and really see what it's all about, find out and understand what it's about, even if you're giving your time for nothing. Go make cups of tea for people. So again, that would be a way. I think also looking at the Canadian and the US market, it works differently. But if you're really interested in property at that sort of age, that would be my starting point. Try and see how you can get some experience, and then, as Caroline said, it's about raising money. It's about sourcing deals to people. Maybe going that rate. But we've got experience of people. Age is just a number, isn't it, Caroline?
Yeah, age is a number. It doesn't really matter. In fact, I can't wait till my boys turn 18 so I can get them mortgageable, start scaling and growing a business in their name for tax planning purposes. So, yeah, I mean, regardless of what your circumstances, what your age, your credit profile, how much or how little capital you've got, there is always a strategy that is right for you. But there are about 5 or 6 different factors in your life that will shape the right strategies. And it's not a one size fits all. I think I've already said that tonight. And so we'll talk on the free webinar tomorrow night about at least 20 various strategies. Some will not be appropriate if you're just starting out. Like I said earlier, land development, your big commercial projects, big developments, they are not appropriate. But I think most people recognize that when they first start out, because generally it takes way more capital to get in and, refurb these buildings. But there's a lot of other strategies that some people haven't even heard of. You mentioned, Rick, there, options. People generally walking the streets do not even know what an option is. And that's more of an advanced deal structure, a way that you can structure a deal without transacting in the standard traditional way of having deposit and mortgage. And so there are a lot of different ways that you can structure a deal that can then change the way that you change the amount of capital required for that transaction. So keep the questions coming in the comments box there. Another common question we get asked, Rick, is, I want to do buy-to-lets. Where should I be buying?
Again, it really depends on your personal circumstances. So what I always say to people is, look where you currently reside, and can you make it work there? So that can be kind of more challenging if you're based in London. If you're based in certain areas in the southeast, it's not impossible to do stuff on the south coast in Kent. There are pockets, but generally, we're working, towards the Midlands, the northwest, the northeast, South Wales, those kind of locations. So it's really understanding the numbers, Carol. I think a lot of people make the mistake of seeing a cheap house online and thinking, oh, excellent. There's a postcode in Yorkshire, for instance, where you can go, oh, brilliant, I can pick up houses for like 20 grand. What could possibly go wrong?
Yeah.
Lots and lots and lots. So the really important thing to finding an area is understanding, the market dynamic, its reason for being there. What are the profile of the people that are looking to live in those areas? And it's always buying for a defined demand. That's really important.
Yeah, I think, again, when someone says, I want to do buy-to-lets, where should I start buying? I really start to actually question, well, why are you focusing on buy-to-lets? Because, again, it might be that they've chosen buy-to-let as a strategy, or they're saying that's their strategy, when it's coming from a place of not actually knowing that there's lots of other options for them to do as well.
Yeah.
So, again, it's that understanding what you're trying to achieve and the time scale that you want to achieve it in. and then saying, well, actually buy to let probably isn't the best strategy for you. Or another common one we get is flips. I want to do flips because, again, and they've got their head, I want lump sums of cash because then I'll be able to buy the investment properties that I can keep. Again, very common thought process that people go through is I want to flip because I need cash.
And we find that a lot with our tradespeople. That's kind of quite a popular, misconception for people in trades. They build up a bit of a capital pot and think, right, become a little bit of a one-trick pony and think, well, I can only do that. And so they might be trying to run, projects for other people, and then, each year try and run a project for themselves to get the cash and the cash and the cash. And they always seem to be chasing the cash. There's never enough cash, is there? There's never enough cash. Always need some more cash. And often, when we work with tradespeople and you say, right, well, what about cash flow? Why are you doing this? Oh, well, really, I want to step away from my my day job and I need, £4,000 a month cash flow. Yeah. Okay, cool. If we could show you how to build up cash flow through buy-to-lets by recycling your money and building that up, maybe getting 4 or 5 buy-to-lets and then giving you £1,000. What difference does that make to your life? Oh, cool. I hadn't thought about it that way. I was trying to save $1 million.
Yeah, we get that a lot. And we had a lady that was like, I want to do flips from a pension pot, flips from a pension pot, flips from a pension pot. And we're like, lump sums of cash isn't going to work for your pension pot. Like, to have any kind of decent income from a pension pot, you need about 2 million quid in there. So that's a lot of flips. If you're starting in your 40s, then you're going to get busy. In actual fact, what she really wanted was security when she retired, which is cash flow, right? So again, people get so obsessive about something and they think that the answer is one strategy, when in actual fact, they might have have completely lost it a little in their thought process, because it's based on a lot of assumptions or on the limited amount of information that they have available to them. Yeah. Now, Jay's asked another question. Now, I know you're based in Jamaica, you're planning on moving to Canada, and you're asking, do you have to work for 2 years before you get a loan from the bank to invest in a single family house? Well, in the UK, that's not the case, but I can't comment on if that is the case in Canada or Jamaica. In fact, one of our episodes on our podcast, I'm interviewing a very good friend of mine, Tim Sai, who is based in Canada, and he's an investor there. And so check out that podcast episode. If any of you watching now are not familiar with our podcast, it's called This Property Life. I'll put the name in the comments here and you can check it out. Because the interviews are with a number of our students. We have industry specialists on there. Property helps if you can spell it. Property Life.
And if you're a bit more of a visual person and you like to keep up with what's happening visually, then we've also got our YouTube channel where you can see some of the deals we're doing, covering some of the strategies. So some of them are long listens, some of them are a bit shorter. And interestingly, Jake, there's one on there. I'm going to show this. So Jake is interested in exploring a bit more detail. Have money in various stock investments which do okay, which are reluctant to get into property because I have no idea where to start. Yeah, I mean, I think that's typically where a lot of people are, Jake. I mean, it doesn't sound like you need to be convinced that property works, but I know property works. I just don't know how to do it. So I'm going to be blunt and say, find out how to do it. If you don't know how to do something, get educated. And actually, once you know a system and a process, it's like paint by numbers. Property is easy when you know how. It's following a system. I like the fact that you've got, stock investments. Life, and particularly if the last 18 months has taught us nothing about life, diversification is key. Yeah. So, but I think that, and again, it would be interesting to get into this in a bit more detail with you, Jack. So why would you be interested in property? Is it because you want to sack the boss? Hopefully your boss isn't on here. Is it because you are the boss and perhaps you want to have more, time? Ask me about my time balance. It's far more important than my bank balance, and it's giving you options. So property can be a great way of expediting that, because a lot of people, I was exactly the same. I thought, right, at best, if I work my absolute butt off, I'm going to be maybe retired if I'm absolutely hitting all my strides. God, wouldn't that be great if I could do it at 55 and live life on my own terms? Wouldn't it be great if you could bring that forward 10 or 15 years by making choices incrementally each year? And actually, you can do this. So you can make it, your whole thing, or Jake, you can do it as a side business to build up. And I was doing some mentoring with one of my students just a couple of months ago, and one of their big things was about going 4 days a week, and really wanted to focus on so what's the issue? But I want to go 4 days a week, and we did the maths and balanced out. And why do you want to do the 4 days a week? Because I want to do more in property. And actually, they had all the answers. All we needed to do was just give them a little bit of a nudge towards actually having that conversation with their boss. And they're happily going to 4 years. But they've been procrastinating, about this decision for perhaps 12, 18 months. Massive breakthrough. Pleased as punch, can't wait to go 4 days a week. So it could be that you do that with your property business. You're sort of building your property capital up so you can then reduce your hours in work. So I hope that's been useful, and you're quite welcome. No worries about shooting off. Join Caroline tomorrow. If you want
the webinar tomorrow, Jake. I'll go into a lot more detail, but the bottom line is you don't need to. Number one, the first thing I'd say to you, Jake, is you won't be managing your own portfolio. You'll have someone else managing your own portfolio. But look, it's about, before you even started investing in stocks, you probably found out a little bit about it before you put your money into the stocks. It's exactly the same with anything. There's only 3 vehicles to create wealth on the planet: investing, buying, or owning businesses, investing, buying, owning properties, investing, owning, and trading stocks. That's it. There's only 3 investment vehicles on the planet, and either one that you choose, whichever one is most attractive to you, you have to know what you're doing. I would never, take my 50 grand and pop it on the stock market and go, let's hope that does well, right? It's absolutely, there we go, Jake. Here we are. It's in the comment for you. Then
also there's some, once you get to know the ins and outs, there's some amazing things you can do with pensions. So have a listen. There's a podcast on there with John talking about how you can use your SAS pension to invest in property. That's another session again, Caroline. So I'm not even going to start with that one. But if you've got if you've got assets there, I think the thing to do with anybody that's got pensions, investments, premium bonds, and all the rest of it, is to have a look at them and see, are they serving you? Are they working how you want them to right now? And the great thing about cash flow, and this is what we teach, is developing cash flow. You can go into a restaurant and you can spend the cash flow you make from property to pay for your meal. You can't live on equity. You can't always live on, your Bitcoin, speculation, and so on and so forth. So, So, Rachel, if you have a look at the podcast, it's this.
This Property Life. I have been putting them in the comments here, Rick. I don't know if they're going through to the Facebook because I can't see it.
I think you have to post it. So it's this. Okay, I'll put it on here. This.
You put it on there. Get the tag. So for those of you in our Clubhouse room, we are doing a Facebook Live at the same time, and it's going on to our YouTube channel. Check out our podcast. Property Wealth System is a collective of professional investors. We've got collectively, we haven't even counted up how many years investing experience we've got, but between just Rick and I here, there's only 2 of us here, and we've got 43 years between us. So we are professional investors who just in our spare time really love giving back to help people get started or scale their property business. We've all come from very, very different backgrounds. We've had people who are like personal trainers that in their early 20s. We've had corporate people who are looking to get out of their jobs. We've had professional footballers. We've had airline pilots. We've had multimillionaires who have just sold a business and just want to understand how to invest their money better. We've trained pretty much the whole remit of backgrounds and experience that you could imagine. So check out our podcast. We've interviewed a number of our students for that. We just launched that in December. It's called This Property Life. It's on Spotify and Apple and all the various platforms for podcasts. We have a YouTube channel that, again, we have literally just launched. that's got some video content on there to help people. And we are going to, this is our very first Facebook Live and Clubhouse room tonight that I'm sure we will repeat and try and do it on a weekly basis, so we have some continuity and traction for getting all your questions answered. But if you want to hear more about the strategies and find a little bit more out about in depth what we talk about, we do run a free webinar, and we have one tomorrow night, and the link is in my bio, bit.ly link in there, and I put it on the Facebook comments there for those of you that are watching from there. So we've been going for about an hour now, Rick. We have started very gently with a very, very basic questions, but they're very commonly asked questions. How much money do I need to get started, and where should I be buying my buy-to-lets? And actually, we've kind of said they're kind of the wrong questions to be asking, but we understand where those questions come from because of how people have assumptions or preconceived ideas about the property market. So I want to thank Rick for joining me tonight. Thank you to everyone that is in our Clubhouse room. Make sure that you follow and click on all our speakers on the panel there. And we look forward to seeing you all again next Wednesday night. Take care. See you again. Thanks, Rick.
Thank you for having me. Nice to speak to you all. Bye.